today. So as we are taking a look here at Tesla, I think Tesla, now I was on vacation, so I took a couple weeks off. I haven't been here in a couple weeks, but we actually did a debit spread on Tesla, and it went against us for the first part of last week, and then it recovered, and look where we are, close to 495. When we were looking at Tesla a couple weeks ago, it was at 380. We did pick a call debit spread, allows you to hold on to it much longer than a long call when it goes against you. Kind of gives you diamond hands, so to speak, if you've heard this term, right? You know, sometimes we can look at a chart, identify and or possibly forecast the momentum of the trade, looking to like maybe say, hey, this is going to go long or go short. And sometimes you just don't get the timing right. And so when you don't get the timing right, having a trade vehicle, like a butterfly or a debit spread or a credit spread could help you in those situations where momentum is lagging, right? So we're really looking for that strong wave to kind of take us to the profit target when we're on a long call or a long put, right? It's just that type of trade vehicle. So Tesla right now looking good, hanging around this 395 area. As you can see, it broke below the 20. I like to use the 20 on any time frame to kind of get a sense of, hey, is this stock bullish or bearish? And as I take a look at that for Tesla, you can see that Tesla has been bearish. It's underneath the 20 on a 1 hour, on a daily. If we take a look at a 15 a little closer, you can see that it just popped up above its 20. This means that on a short-term time frame, it is changing trend. So remember, when the price is below the 20 EMA, you're on any chart, you can easily identify if it's bullish or bearish. If it's underneath it, it is bearish. And you can see where momentum actually shifts above the zero line, identifying, hey, we could get some positive momentum. Once we get positive momentum and we get price above the 20, we could actually see a larger move to the upside. So right now on a 15, on a short period, this is starting to look constructive. The next time frame I like to look at for short swings is really the 15 and the 1 hour and then the daily. And so as I look at the 15, I can see that it's correcting. It's getting a little bit more constructive, right? And then as we take a look at the 1 hour, you can still see it's underneath the 20. Now we just broke momentum above the zero line. Now this is a custom indicator that we've created. However, it's really the foundation of this is modeling the CCI. If you guys go into thinkorswim, you can get a momentum indicator. I like, there's about 1,000 indicators out there, and trading is very subjective to all these things that you're looking at and forecasting. So for me, an easy identifier is for momentum, the CCI indicator. So you can pull that up and then you can start utilizing it. And really what we have is the zero line. Anything above it is bullish, anything below it is bearish. And we're really looking for momentum, strong momentum. So here I'm looking at a little bit of weak momentum here. And the reason I say that is you can see that it's cresting over the zero, but it really hasn't made like a push to the upside. And we really want to see an erect push to the upside versus this kind of, curve getting close and staying near the zero line. So as I look at this energy, because that's really what I'm doing, is just looking at the energy of the momentum on a 1 hour and looking at it and saying, look, we went up $17 today. I'd really like to see price pop above the 20, and then I'd like to see momentum get stronger and head towards that 100, not kind of hang over to the zero line. When you can see momentum shifting to the upside, then you can really gain confidence by the supporting evidence that you're seeing. That's what this is, right? We all talk about confluence. Well, this is really just supporting evidence to help you with your decision making on forecasting where a stock is going to be going next. So as we see this, we say, okay, if we can get a Tesla above this 20, we could have a play to where, well, its last pivot low was at 415. That gives us a lot of room for next week, actually. So this actually looks nice. And you can see for the last 4 days or so, our momentum has been terrible, right? And so this has been a short for the last 4 days. And so oftentimes when we get a correction, that correction doesn't last as long as the same period that we were going up. So if we had a nice bullish trend for, let's say, 2 or 3 weeks, typically speaking, when we do a pullback, it's much quicker. And this is where this ideology of, hey, when the market is bullish, we're going up a flight of stairs. And when the market is bearish, we're taking the elevator down, right? So when you think about that and you're looking at the chart and you're trying to identify, hey, how long is this pullback going to last? Well, think about that analogy, right? So the market could just keep pumping up when it's bullish. But when it's bearish, it goes down fast, and then we typically recover, unless, of course, it's going to be a bigger move than just a standard 5-10% pullback. And that's typically typical. Now, we didn't have that Santa rally, did we? We were really expecting that. Looks like Santa got beat up in the market. So not this time around. But you can see how, people, we kind of use what has happened in the past to kind of forecast what's happening in the future. But that doesn't necessarily mean, hey, what happened in the past is going to happen this time around, right? And so I think this was an excellent example of that. People were really pumping up that Santa rally. We really didn't get it. So as we are starting to pull back, we are making a correction. Now, oftentimes when you have this period where you're, bearish, you'll typically see price come up to a resistance level and then pull right back down again. It's not until we actually break a couple of these resistance levels that you can really see the trend change. And you're really starting to see trend change on a smaller time period. And now we're really looking for the trend to change on higher time periods. So we see it change on the 15. I'm looking for now the hourly. I need price to stay above that 20 on an hourly, and then I'm interested. Could you create an alert right here on thinkorswim? Just right click it around where the price is, which is 397.87. You can round it up to 398 and say, hey, if this gets above 398, I'm certainly interested in maybe a short-term swing trade. And when I look at a short-term swing trade, I'm thinking like, 3 days to 5 days, 2 days to 5 days. That's where I kind of use that weekly contract the following Friday, right, to get into a trade. Because that's really nice, because you're looking at the charts on a shorter term, but you're letting that swing target play out. So that really is like one of my favorites. So I see Tesla recovering here, and I would like to see it above that zero line. Now, if we take a look at how momentum looks on a daily, right, it looks weak but correcting. So this has a lot of room to really go and need to make, right? I mean, it needs to pass above this negative 100 line. It needs to get to the zero line, and then it needs to break above that. And still on a daily, right, if we were looking for, let's say, a couple week momentum to the upside, we really need price to get above again that 20. And to me, that 20 is just acting like resistance. And you can see where this trend pivot line is has already kind of identified our last resistance zone that we broke through, which was once acting as support, is now, right, going to be resistance. So the 20 acts as resistance as well as this vertical trend line. If we can get above there, we could see higher prices. But as of right now, looking to see if we actually make a correction from here, or are we going to continue lower? Because what's the other flip side of this? If we can't break above the 20 and it's acting as resistance, what happens after it acts as resistance? Well, we start to head lower again, right? So here on Tesla on a day chart, you can see we have higher highs, we consolidate, another higher high, a higher low, then we have a lower high, and now we have a lower low. So you can see how we were doing this, right? And now we're kind of doing this. We're doing the opposite. So now, if the 20 here acts as resistance, this is going to be a lower high, excuse me, a lower high, to only do what? To possibly make a lower low, okay? So either that or we do a double bottom, and then we try to change the trend again. Sometimes if you can know what, step 1, 2, and 3 is of how price actually works, it can allow you then to think through what your plan of action is going to be so that you can set it and forget it. Now, I've been a trader for over 20 years, 25 years actually. I'm getting older and older as I speak. And when I think about, how trading has changed, it's remarkable. So the fact that we can do so much more as a retail trader in front of our screens and really automate our trades, right? So even though I've been trading all this time, automation really in the last 7 years is really is really kind of keeping up with the bigger institutions. And the bigger institutions have been doing automation for a really long time now. They hire the best of the best coders so that they can create algorithms that trade for them. So in retrospect, the retail trader is the last that is still not using automation as readily available as the big boys. And so I really got into automation about 7 years ago, and that's really primarily what I teach is automation on thinkorswim. And so if you go to tradeingindicators.org, you can read more about it. But really, I think that the tools that thinkorswim has, or maybe IBKR, they're really starting to identify that, hey, you can do your analysis just like what we're doing right now. You can pinpoint trigger levels, and then you can say, hey, you can program right into the computer. It doesn't take very long. Hey, when price gets above this level, I'm in for a long call, or I'm in for a call debit spread as an example to go into a bullish direction. And you can utilize the same support and resistance that we're talking about today as levels that, hey, if this breaks, I'm out of here. Or I can use a trail stop and say, I want my trail stop to follow price as it's going in the right direction. But as soon as it hits a certain amount, I'm out. And that's how you can protect yourself, right? And still keep your risk low with the probability of hitting those higher targets for like a swing trade. Now, you can utilize automation on day trading as well. The targets are always smaller on a day trade. However, the fact that you can actually utilize automation even while you're scalping, sometimes blows people away. So I look forward to hearing about your journey through automation, and let me know if you have any questions on that. So that is Tesla. Let's take a look at Nvidia. So Nvidia now, looking good, breaking out of some consolidation. Let's take a look at it on a smaller time frame. This looks really nice. So you could see where, let me just go back here a little bit on a 15-minute chart. Let me go back here on an hourly. And then you can kind of see for, we were kind of consolidating there. We were rising, consolidating, we fell, consolidating some more, fell with the market. But Nvidia looks so strong. And I think one of the reasons Nvidia looks so strong is if you're looking at option flow, you can really see Nvidia institutions are buying Nvidia. I keep getting this wrong. Let's see if I can get that. There we go. So when I start to look at option flow as an example, and if you're utilizing some of these types of tools that, follow whale activity, that's what it's called, but really, the institutions are making the candles on the screen. It's not the retail trader. So what we're trying to do is we're trying to write trend trade. And what does that mean? Well, it means that we're following the trend. And the reason we're following the trend is because the whales, the institutions, are in front of us in this ocean. And we're really just following them, right? We're letting them kind of forecast what's happening because they're the ones who actually move the market. The retail trader does not, by the way. So when we start to think about this, okay, then we start to look at like tools like option flow and say, hey, what is this option flow telling me? Now, do the institutions always get it right? No, they do not, right? Because I think a lot of institutions during the Santa rally, I was watching the institutional flow and I was looking at a ton of money going into a lot of big names, and it didn't happen. Okay. Now, whenever you see option flow that have dates that are very far out, that really means that really the institutions don't really know what's going to be happening next, and they're parking their money somewhere. They're parking it because they don't want the time value to penalize them. So remember, when you take a shorter dated contract, like a week or two out, you kind of have to be sure that that's going to be being played out in that period of time, or that time value is going to punish you and you're going to lose a lot of premium capital from your contract. So when you start to see option flow and everything is really kind of far out there in June and next December, they're just parking their money. They're keeping it, in the big names, and then they're waiting to see. But when you start to see option flow more like shorter term levels, like within the next week or two, you could start to identify where some of those institutions are identifying strong momentum. And they can also see, right, all the orders. So that's really kind of a cool way, if you haven't used these type of tools before, to try to help you in your analysis of, hey, what kind of ticker should I be looking at? So as we take a look at Nvidia, you can see on a 1 hour, it looks really constructive here. We broke out of some consolidation bands here on a 1 hour, which is really positive for today. And we basically made a new high. So this was the last pivot high, this dotted green line. And so we made a new high today. So this is supposed to act as support, right? So as long as Nvidia stays above 141.82, we could be going higher. Now, if we take a look at a longer time frame, we look at a daily as an example, we could see on a daily, on a longer term time frame, that the pivot high is actually located at 152. So where are we going to go next? Well, all you got to do is just look left, right? I mean, there's so many classes on support and resistance, but the easiest way is look at your chart, look left. So if we look left, we could see that here's an area of resistance at one time. So this could be resistance as well, as this price is trying to get or make its way up to 146.82. And we just look at the last pivot high on a daily and we say, okay, this is definitely resistance, right? So if we break through 146.91, thereabouts, these are always like zones, not fine lines, we can then make it to 152. So I think Nvidia actually looks really strong here. So many days, and even though the market went down, I think Nvidia held up quite well. And I think it's because of all the institutional flow. So what's the institutions doing when the market's going down and they're buying? Well, they're buying at the lows. So think about that for a moment. I know it's hard for the retail trader to maybe buy longer dated options because they're so expensive, but really that time value is helping you buy a position low so you can wait out this kind of storm. And if you're not going to buy the position that far dated out, just think about a different type of trade vehicle like that debit spread. Usually, gosh, it's so much cheaper than buying a long call or a long put. So as we take a look at Nvidia, I think Nvidia looks really good here on a daily. I think it still has some more room to run. On an hourly, it looks good. And then let's look at it on a shorter level, still above the 20. Now, whenever you get too far away from the 20, on a shorter time period, or even on a longer time period, you can expect, right, a reversion to the mean. Because, the way that, stock charts if you ever take a look at them. They don't get too far away from the mean. So whether you're using Bollinger Bands or a set of 3 type of EMAs, it's really up to you what you can follow, right? But you don't want a whole bunch of spaghetti on your charts to just confuse you. So as we look at the reversion to the mean, you have to think, okay, there could be a pullback here. So as an example on a 15, I would be concerned if we broke through this little area of consolidation today, broke below this, I don't know, 142.80 area, because if we did, that's a level right now of support. And if we break through that, where are we heading to? We're heading to the 20. And then we'll go from there. I really like the curve of this momentum. You could see that we popped up today, and then we're coming down. It's kind of resting as momentum is resting, as the energy of the price is resting as well. Consolidation. What ends up happening after consolidation? Accumulation or distribution. We're either going to go bullish or bearish after this consolidation period on this time frame. And you could look at the chart on any time frame, and the analysis is the same over and over and over again. So you can always, learn the basics like this, and then just think that it's not any different for any other time frame. So the longer time frames is like a big map, and your shorter time frames is like you're looking at, you're identifying streets and neighborhoods. So you're looking at a bigger view versus a smaller right now view. And so that's how I would describe this. So as long as momentum stays above 0, I think we can go higher on Nvidia. I'm really liking Nvidia for maybe a trade for next week. And then let's look at Uber. I've been waiting for Uber. Ah, boy, finally. So let's take a, didn't get the timing right. In a sense, I did, only because I got long dated contracts. I think they were out in June. But was looking at this downtrend for Uber. And now we finally can see that we broke above the 20 here. We broke above some consolidation yesterday, and now we're getting to above the 20, which is great. If we could stay above that 20 and it acts as support, oh boy, our next level is 66.98. And after that, well, we just keep going up where you see these bands are, right? You just keep going up to where there's other levels where prices hit it and, couldn't break through it. And so, you have another level here and you have another level here. But then, where are you heading to? The last pivot high. So looking on that as a daily, this is looking constructive. Could be a nice break to the upside. Let me just take a look at this. And as we look at a weekly, you could see how price came down to this vertical trend line, and then we stabilized. So this could be the start. And so you could just look at this trend line and say, that's holding as support. As long as we don't break below that, this could be constructive on a weekly, right? On a weekly level. So as we look at a longer time frame, we could see that this is holding as support. And then as we look at a shorter time frame, we could see, wow, this has been consolidating for so many days here, right? A couple weeks it's been consolidating. What happens after consolidation? Accumulation or distribution. What does this look like? It looks like accumulation. We're going up. Distribution's going down. So this is really looking positive right here. I really like it. And our next target is 67.07, and that still would be a nice profit for, as an example, a weekly debit spread, or let's say a weekly call. Now, Uber doesn't, if you go to the trade tab, you could kind of look over here and see, hey, how does Uber typically, right? What's its normal price range? What's nice about thinkorswim right now in a lot of these platforms is you can see the implied volatility as well as its expected move. The markets are relatively pretty good about expected moves. So we got plus or minus for next Friday, 2.5 points. So you can see that, Uber's not a high flyer. It's not a, it's not a rocket ship. But when it starts to go, it ends up going. And so you could see that we have this expected move about 2.5 points. Now you could do that on any time frame and on any stock. If you don't know it, it's very helpful as a trader. And then now let's take a look really quick. We only have a couple minutes here. So let's take a look at the chart for Uber. I do like this, but I do like more powerful stocks for these short-term trades. I do like Nvidia here. 142. I really like this one. So let's take a look at Nvidia for a long. Another reason why I'm choosing Nvidia, by the way, over Uber is because Uber was more like a technical analysis play, where Nvidia is more of an institutional play. So I've been seeing a lot of institutions diving into Nvidia with their option flow. This could give you trade ideas, right? So when you actually start to see that just because they're dumping money in it doesn't mean it's going to move right away. So you have to like look at that money and then start looking at the charts. And then when you really see the momentum start to go, then you can pick and choose your entries. And so I actually like this for a debit spread for next week. So we're going to go over to Friday. And we're going to just pick the at the money. It's the simplest way to do this. You're going to go right over here to vertical and you're going to drop it down. By the way, if you don't know, these are all the different types of strategies that you could utilize in options trading. But really, you only need just to know a couple to kind of stay on top of the market environment and then go along with it. So with this vertical, I'm going to just come right over here and I want to show you the quick difference between buying a long call and then buying a vertical. And this is great for small accounts. So as we look at a contract for a long call on Nvidia for 7 days out, we're just leasing 100 shares of stock for 7 days, $355 to get that long call. When we go to a vertical, look at the difference in price. 50 bucks. $50 for a call debit spread on Nvidia. It's a 144 or 145. And what am I saying? I'm saying, hey, I want Nvidia by next Friday to stay above the 144 range. And what's the expected move for Nvidia? 7.7 points, up or down, right? Now we have identified on the chart our support and resistance. We could utilize that as a stop loss, or we can just say, hey, 50% loss, 50% profit. That's when I'll start to exit this position and look for more take profit areas if I have enough contracts, or just cut it at 50%. And that's what I typically do. So here, since it's, I'm going to get, you know what, let me just get 5 of these. I don't want to make you think, you know, based on what your portfolio balance is the way that you identify how many contracts you're going to take. So you get to identify, you're only using 1 to 3% of your portfolio value, right? If you didn't know. Industry standard, right? These are just typical industry standard type things. No secrets here. So if you're using 1 to 3% percent of your portfolio value, you can then identify for each given stock, right? Okay, well, how much is that based on my portfolio value? And then those are how many contracts I'm going to take, or shares if you're buying stock. And so this will help you then, so that when a position loses, but yet another position wins, that the value of those are comparable in your portfolio to make up the difference. So think about that. If you have any questions, let me know. I'm going to go ahead and send this through. And thank you guys. I hope you guys have a great weekend, and we'll see you next week.